Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A fourth bullish white soldier yesterday, but that was not the real story. The story was in two parts. The first part was that yesterday's action made up day two in a two-day descending hawk pattern. Now, descending hawk patterns are traditionally seen as a bearish reversal pattern. Now, I have no data on how good they are at that, but if you take, for example, the opposite pattern, a homing pigeon pattern, which is traditionally seen as a bullish reversal pattern, but in reality, the data shows that close to 6 out of 10 times the market becomes a bearish continuation pattern. Well, then you can see that the provenance of this pattern being a bearish reversal may be a little bit suspect. The second part of the story of yesterday is a lagging indicator, but still an important one. There was a dead cross of the declining short medium moving average, currently 73.85, crossing below the declining medium moving average, currently 73.86. A lagging indicator, but one still noteworthy. The market was once again contained by the lesser Fibonacci lines at 72.93 and 73.10 overhead, aided by the flatlining long moving average, currently at 73.19. Meanwhile, below we had the 250% Fibonacci lines, the recent one at 71.84 and the larger July 21 to June 22 move at 7200. Below these we have the lesser Fibonacci lines at 70.75 and 70.90, as well as the old neckline, currently at 70.36 of the late December 21 to start of March 22 head and shoulders top. Yesterday, neither threatened nor supported the targets below for the big March to early June ascending triangle. A primary target X for this pattern would be lower down in the 66.58 area, with a secondary harder to get target X1 in the 63.80 area. There's also a double top formation, even Eve type, formed from March to date. This has a primary target X2 in the 69.18 area and a harder to get secondary target X3 in the 66.35 area. The primary target for the double top target X2 was reached last Monday. Now, as we are in the last week of June, last day of June, it's timely to point out that we are currently set up to make a possible monthly key reversal down. If we close tonight, the 30th of June, either above 75.86 or below 75.13, then we'd be on. Right now we are looking very much at a possible monthly key reversal down, in which case it will also be an immediate countering monthly key reversal down. So far today, a lower open, enough that we have a possible bearish below the stomach pattern today. Prices punched down through the 250% Fibonacci lines and are close now to the two lesser Fibonacci lines below at 70.90 and 70.75. German DAX futures. A lower bearish black crow yesterday after 2 days of indecisive spinning tops. It seems the market got fed up after those 2 days trying to surmount the overhead resistances formed from the 2021 low at 13,300 and the February 21 low at 13,356. Prices opened at the 13,115 resistance and basically headed lower after that, though holding off of testing the slowly rising October 2020 today uptrend, currently at 12,806, and the May 2020 today uptrend that is just below that, currently at 12,673. Further down, a little under the V bottom low from March at 12,425, we have target X2 in the 12,240 area. This is the possible bear flag pattern formed over the last 4 weeks. Finally, on top of all this, we are finishing June, and we are already set up for a monthly key reversal here. If we close either above 14,378 or below 14,090, then we'd be on. Well, right now we are very much looking like a monthly key reversal down. So far today, well, a lower open and a very strong move lower, below both uptrends and closer to March's low and also target X2. US E-mini S&P futures. A lower but still indecisive spinning top yesterday as the market halted its decline from the previous session's key reversal down because it had hit a lower time, currently at 38.27, the old broken January to March bearish shift pitchfork. Now, I know that this pitchfork has been broken and the bearish Andrews pitchfork is the one that is running the market, but please remember the time crossovers these back in May and early June. then perhaps you'll see why the echo of this broken pattern still resonates. I'd highlighted the crossover of these patterns, of these tines, from these two pitchforks as periods where one could expect one or more of the following: volatility, change in trend, or reinforcement of a trend, with red circles on my daily chart. For your information, next crossover, indeed the last crossover of these two patterns, should they not be usurped by some other pattern or action in the meantime, will be on the 12th of August. There's one other pattern I'd like to draw your attention to. There's a labelled late March to late April to date possible bearish halfway hesitation. I've detailed two separate patterns, and there is an argument as to where the pattern should actually start from, and that's assuming the pattern works in the first place. Therefore, target X is for the pattern originating in April and is in the 35-55 area, while the lower target X1 is for the pattern originating in March and is in the 34-20 area. So far today, well, a lower opening. Well, not that much of a lower opening, but below the lower time, effectively, and a fresh move lower still. The next supports are the March 21 low at 37.20 and the February 2021 low at 36.56. Thank you for listening. The short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with these broadcasts. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.